I'm here with Aroob Qureshi, an expert on personal finance. She runs Funding Nest, helping people all around Melbourne get loans and plan their financial future. You're a personal finance expert. How do I get rich?
Hi, Marty. That was an amazing introduction. Loved it. Look, I think it's not about just saying, let's get rich. It's about making a plan. And that's where we come in, create a long-term and a short-term strategy. And what I tell all my customers is, you just slowly build that property portfolio. And once you're at that point where you've got a huge property portfolio, you can offload a few things and then you have a great retirement or even semi-retirement. It's a long-term game. It's not like crypto or ETFs. It's not that fast, but in the long term you have assets that are always going to go up in price and value. So um, there is a little bit of a issue at the moment with higher cost of living, I would say. So, people are thinking of safer options as opposed to betting money on something that may go up or down. So I think property is always a safe option, especially in Australia. It's always been a safe option. Property never goes down in Australia. So it's been great for a lot of people who have invested in property.
What's a property portfolio?
So basically, if you have your own home, which you're living in, that's just a home. But if you've built, say, two, three, four, five properties, then that's a portfolio for you. A lot of people, start with, say, a smaller house or an apartment, and they might get another one. Then they'll rent one of those out to someone else. They might get a third one, put it up on Airbnb. We can actually even use our super, which is kind of like a retirement fund, and you can use that to purchase property as well. People buy properties under companies, under trust names. So, there's a huge variety of ways you can actually purchase property. And it's not just a home, it could be commercial property, medical centers, um, you know, fast food chains, whatever. That's all property, and that can be bought and used to build your property portfolio, build your wealth.
It's not just helping people get one house, you help them make a whole portfolio so they can invest in a bunch of properties.
Absolutely. Yeah, that's how you become wealthy. When you look at all these rich people, they've not just got their home, they've got multiple properties, they've got commercial properties. If they've got a fast food chain, they've probably bought all of those locations as well. So, and the way it works is you can show it in your tax and benefit from that because that's all it costs. You can claim it on your tax and, it's a double benefit because it's increasing in value over time, but then also you can claim it on tax, all those expenses. Um, you can buy it under a company name and then rent it out to yourself. So there's a huge, huge area where you can benefit from having properties.
Yeah, as part of that also diversification. What do you say to people who just own one house and like this is my dream house? We're gonna pay off the mortgage. We're gonna sell it. This is my main investment.
Yeah, definitely a lot of people think that. And initially, when I got into the space, I was thinking the same. But you have to build from somewhere. And if you get a, say, smaller house or smaller apartment, it's affordable to you at the time. When you see that say, your business is growing or your income is growing over time, then you can actually even take equity out from your current house, then buy another house, and then that's just something you keep doing over time, every couple of years, rinse, repeat. And that's how people actually build portfolios. And I'm not saying don't get your dream house, but that might be actually the third or fourth house you get. And then all the other houses you've got, they might not be your dream houses, but you've rented them out, you're getting income from them, you're getting tax benefits from them. So long term, think long term. I know it's so easy to get, bogged down by, oh, I just want to build my dream house. But, that's just one asset in your life. You have to think about the long term strategy.
Got it. All right. So I'm Gen Z. Right now,
Yeah.
my generation, we're getting out of college, we're getting entry level jobs, starting to invest. Are there any economic trends I and my peers should be aware of that's going to make it different than it was for my parents? In other words, anything that might be outdated for my generation in the world of financial advice.
Look, I completely understand. There is a huge generation gap, which means there's a gap in what we used to think versus what your generation thinks. A lot of the people in my generation were like, get into one job, stay in that one company for your whole life, or maybe change once or twice in your lifetime, save money, have a huge deposit, and get into your house. And as you mentioned earlier, just your dream house. But what I say is, with your generation, it actually might be better if you look into sort of getting a side hustle or some way or form of building that extra income using any sort of government schemes that might be available, or even family guarantee schemes, which means you can get into a house with a lower deposit. Don't think, you need to save for 10, 15, 20 years before you can even afford a house. Use whatever leverage you've got available, and maybe even get a smaller house, rent it out straight away. You don't need to live in it. Continue sharing accommodation with your friends, and living in the city. If that's what you want to do, you can still live your life, but then have those investments on the side.
You said government scheme, family scheme. What is that?
So in Australia, we've got something called a government guarantee scheme. And basically, that means you can even get into a house on 2% deposit or 5% deposit, which is great if you don't have the standard 20% deposit that's always been available and always been the case. Because 20%, if you're getting a house that's 500,000, that's a lot of money to save. And that's going to take you 10, 15 years. And by the time you even get to that amount, it's devalued. The money is devalued. So what I would say, if you have 2%, even 5%, if you have those schemes available, and there's always schemes going on everywhere around the world. Government's always trying to, promote housing. So get into whatever schemes available in your country and get into that first property. And as I mentioned, it might be a small apartment, it might be a shack, but at least you are inside the market, and then you can just move forward from then. Um, family guarantee scheme is basically your parents, if they've got a house, it might be completely paid off or it's even half paid off. You can actually use them to get a guarantee on your property, and that way you can actually use 5% deposit again to get into a house. Because some of these government schemes have, thresholds. Your income needs to be a certain amount, or you can buy a house only for up to a certain amount. So family guarantees are good in that case, where your parents can sort of use their property to leverage, and then it just helps you get into a property market sooner with a 5% deposit, and you don't have to pay any extra LMI, which is lender's mortgage insurance, or any risk fees that need to be normally paid.
So usually it's you have to do a deposit of like 20% of the property value to get in the house, and this government scheme will let you bring that down to like 5% or 2%.
Exactly, that's correct. So that means obviously initially you're not saving for years and years, and you can get in with 2% or 5% deposit. Also, another thing is, you might be able to use gifts from family. So say your parents are like, save up 20,000 and we'll contribute 20,000, because they're at that stage where they can afford that. And that's another good conversation to have with your parents, because I feel like the new millennials or Gen Z always kind of want to be independent in the way they do things. But, asking for help is not necessarily a bad thing if long term it's going to be something that's going to help you build your wealth or get you into your first home. I'm sure a lot of parents actually will be happy to help out. So that's definitely an option available. And as I mentioned, the government schemes are pretty handy at the moment as well.
Incredible. You think there's something like that in America or wherever the listeners to this podcast may be?
Yeah, Yeah, absolutely. I'm always researching what's happening in the world as well. So I know New Zealand, which is our neighbor, they've got some similar schemes. And in America, there's always schemes coming up as well. But at the moment, I don't think there's anything, but family guarantees are usually something you can do all the time.
Just processing that. Cool.
Yeah, I know it's a lot to take in. A lot of people don't even know about it, and that's why I'm here to educate because you just think, oh, getting that house is so hard. But no, there's ways around it. And it's always really a great idea to talk to a professional. It might just take your 15 minutes, 30 minutes to talk to a professional, and you can actually set up a strategy. It might not be straight away. You might need that 6 months, 1 year, 2 years before you can get into a house. But, why not talk to someone? At least you have that um, roadmap to know exactly what you need to do.
So then, all that being said, should young families today get mortgages or rent out?
Look, I think it depends on your overall circumstances, but it is something you should think about definitely because long term, how long can you rent it out? And eventually, you'll have kids and they'll move out. And then you want to have that little nest. That's why I call myself funding nest. So you have somewhere you can have your retirement in your little base. And I think renting long term, it's pretty much money down the drain because you're paying for someone else. And short term, yes, of course it works. But long term, getting into your own house, doing things the way you want to do, I think it's really important. There's a few different ways to do it as well for young families. I know it's a little bit harder because you might have kids and they come with a lot of expenses. I know because I've got kids as well. What I suggest if you have, say, family that you can stay with, they might have a couple of separate rooms you can stay in for a little while. You can talk to them, or, we'll pay sort of minimal rent. They're happy to do that. Then you can save a bit more. Maybe get that non-flashy car because getting a personal loan that just adds up to your expenses. Maybe not rely so much on your credit card, and slowly chip away on those savings. And then hopefully one day you can get a house for your kids, for your family.
Long term bad, short term good for renting.
Yeah, correct.
Gotcha. Yeah, because, I was brought up with the notion of, it's your biggest investment. It's really important to get a home, even if that means a mortgage. But I think a lot of personal finance guys now are like, no, because if you just rent out, you have a lot more flexibility. Let's say your job takes you one place or the other. But then at the same time, there is a lot of advantages in owning a home, isn't there? So there's advantages and disadvantages. And uh,
Exactly.
yeah.
As I heard someone say, one eye on the microscope and one on the telescope. So part of your strategy should always be short term, but then the other strategy should be long term at the same time. And I know sometimes it's hard, especially when you're young, to think about the future. But when you get to your 30s and 40s, then you're like, oh, I made the right decision. Now I don't have to worry about those things.
So I got some friends with businesses, and they're always talking about all these tax loopholes and this and that, and it goes over my head. I feel stupid. Could you educate me on some good loopholes, the tricks, the cheat codes for personal finance, for paying as little as possible in taxes and anything else you can share?
Sure. So, look, without getting into too much detail, because I'm not an accountant at the moment, I do have accounting background. But what I would say is property allows you to use a lot of the expenses that you would occur for the property as part of negating your income on your tax return. So, me personally, for my investment property, the loan repayments, any interest charge on the loan repayments, I can claim that back as an expense. Um, Anything that I do, say if I need to get the house painted, um, polished the woods, anything like that, I can actually claim it as an expense. And that's what I do, and it reduces my overall income. If you get into the more complicated side of things, then obviously if you have a commercial property, and you're using like a company or a trust structure, then you can actually claim a lot of things, and that helps reduce your income, especially if you are a high income earner or if you've got your own business. Why not use those tax loopholes and really benefit from that as well. So for example, you're a doctor, then you can actually purchase your own medical center, and any and every expense on there, you can actually claim it on your tax. So I would suggest, again, I say this, think not just short term, long term. If you're studying to become a doctor now, then this is going to be perfect for you getting into the property market. It's not just, oh, property, I have to buy my house. Maybe you're just thinking, I have to buy my medical center. So just whatever you want to do in life, just think of that strategy and connect it back to how a property would help you with your tax return. It's not as such small sort of loopholes, but it is part of the bigger strategy that you can claim a lot back. Your rental expenses, your maintenance expenses, all of that, as I mentioned, the interest expenses, that all can be claimed back on your tax.
That's funny. Yeah, you're talking about, yes, and then we can reduce our income. I think that to some listeners that might not be intuitive. That sounds probably bad. But if you reduce your income, so you want to reduce your income by
on paper,
be able,
on paper only.
By being able to count things you're paying for your property as expenses, that lowers your income, which is good. Lower income, good, because that means lower taxes.
Exactly. So, and obviously, lower tax means, more in your pocket.
That's so counterintuitive. I bet most people listening would be like, why would I want to reduce my income?
It's just on your tax returns, not in real life. And, you hear about all these really rich people or corporations, they don't pay any tax. That's how they do it. They claim all their expenses back. So that's what you've got to do, rich in real life, but poor on paper.
All right. So yeah, so it's less income, more cash in your pockets.
Exactly. And as I said, rich on the face, but poor on paper.
And you also mentioned you want to get property now. Like, should I get property now? What does that mean? When should I get property?
I think it just depends on where you are at in your life right now. Where are you in your life? Do you think you're ready for it?
So I just got an internship at a big company. I'm really excited. I really want to get a return offer. I think I'm confident I can get the return offer, and then it's like a nice, high 5-figure salary or 6-figure. That would be pretty awesome.
Yeah, 6-figure would be good.
My girlfriend is in a similar situation, big company. It's that, and we're going to graduate from undergrad soon. We have one more year left, and then we're going to work a few years before we consider grad school or for her law school. So that's where we're at.
Yeah, that's good. Good. I mean, you can start at least saving for the basic deposit. And then you can sort of see, is one of you going to do grad school at a time so the other one can afford the expenses and everything. You can buy in other countries as well as an expat. So that's another option. I know a lot of people who live in, say, Singapore, Hong Kong, make a lot of money, but they buy in their home country. That's possible.
I'm kind of confused on the expat thing.
So if you are living in a different country, you're making foreign income, there are still lenders or banks who will allow you to purchase in your home country. So you purchase a property, you rent it out, and you've got that property, and you travel the world, or you work anywhere in the world, and then say in 10 years or 20 years time you decide to come back home, settle down, you can just come back to your property.
And why are you getting it in a different country?
I mean, it's good for people, especially the younger generations who might want to travel, and not want to settle down right now because, as you mentioned earlier, you might have to travel for work or something like that. It's kind of like having a base in your home country. So say I've decided to move to Singapore for a job, a little bit of a stint, 5 years or something. I can still buy in Australia. And then, rent it out and say 5 years down the track, I decide I want to come back home. I've got a property at home. I've already paid for it for 5 years. Well, someone else has because I'm renting it out.
I'm so
Does
confused.
That make sense? No. So it's basically being an investor rather than being a homeowner. You can buy a property in your home country, get someone else to live in it, so you're just renting it out to someone else, and their rent is covering your mortgage payments. And later down the track, you can either decide to come back, ask them to leave, because obviously you're the landlord, you can ask them to leave, and you can start living in that house. Or you can sell that house and you'll have a huge chunk of money because the house has gone up in value. And then you can buy a house wherever you want to buy a house in.
I see. Yeah. I don't think that would be for me. I'm actually in Bangkok right now, believe it or not. There's
Okay.
there's too many motorcycles everywhere. I feel like I'm gonna get hit.
Yeah, it does get a bit crazy.
I miss America. I miss my big McDonald's and Walmarts.
Whereabouts are you from?
Chicago,
Oh, okay.
North Shore suburbs.
I've been as far as Michigan, but we didn't go to Chicago, so that's for the next time.
Yeah, Michigan's beautiful. All right, when I was 18 and I was looking for summer jobs, I found all these sales jobs online that turn out to be MLM pyramid schemes. And I was really bummed out because I wasted a bunch of time like interviewing with these guys, telling all my friends how much money I was going to make. Is there anything that's predatory like that in the personal finance world that people should be aware of so that they don't get swindled?
In Australia, it's very highly regulated, and I'm pretty sure in America it's pretty regulated as well. But what I would do is go for a finance broker or a mortgage broker that's actually certified and registered, licensed, everything like that. So they'll have a panel of banks or lenders who are actually legitimate, and that way, you're not going to get swindled. Don't go for those short-term loans. They end up having like crazy interest rates, like 20%, 30%, and you just can't pay them. And by the time you're trying to pay them off, you have to get another loan to pay them off. And it's just a bad cycle. So if you are in a tough spot, then definitely get some good quality licensed, broker to help you out. Just make sure it's something legit. Get rich schemes never work. So I'm sure yeah, definitely really check yourself. I mean, it's so good now with internet. You have all the information. You can check everyone's licenses and stuff like that. So I would suggest you do that. It takes like 2 minutes.
Got it. So make sure they're certified.
Yeah.
Make sure they're certified. That makes sense. Yeah, I don't see a lot of certified CFAs, CPAs telling you to put all your money in Dogecoin. So that's probably a good sign, right?
Yeah.
All right, you don't have to answer these next questions because they're about like America. In my home country, America, I keep hearing about these big institutional companies like Blackstone buying up houses everywhere to rent them out, and it's making a lot of Americans mad for whatever reason. What are your thoughts on this? Is this a bad thing? Is this a good thing? Is this a neutral thing? Like, Is home ownership inherently a good thing? Do we fetishize it too much in America? What do you think?
I think that's the American dream. I mean, that's what you always hear. And for an average normal family, it's always been the American dream to be able to afford and buy your own house and live in it. Then at the end, once you're paid off your mortgage, get a caravan, travel around. So from my point of view, I don't think it's a good thing, because if there's less opportunities for the normal average Americans to be able to buy a house, then how can that be a good thing? America is that golden country of opportunity. So I think everyday Americans should be able to afford and buy their own houses.
I agree, but then I talked to a guy like you, expert on real estate, personal finance, these matters. And he was talking about how Bill Clinton did some things to help a lot of Americans who wouldn't otherwise have homes get homes, and created Fannie Mae and whatnot to make it so that even if there's bad credit, it's still like insured, so that the banks that lend will get their money's worth. And that eventually led to 2008, which kind of changed my perspective on things. What do you think of that?
Yeah, I mean, that makes sense. You don't want to lend to people with bad credit necessarily unless you do the education piece. So that's really important. If I come across someone with bad credit, I have to be realistic with them, because I might even have options where there's lenders who might, squeeze them in on a higher interest rate. But for me, it's not about just getting them a home so that I get paid my commission. It's about teaching them long term. This is not going to end up being good for you. So currently have a customer, bad credit issues and things like that. And he did have one option, but I was like, no, we're not going to get you into a house now. Let's fix up your credit. And I was honest with him. And, I said, it's not something you're going to do for the next 6 months only. It's your 30-year mortgage. So long term, you need to fix this, put these debts into payment arrangements, pay them off, work towards increasing your income. And we came up with a couple of plans. And I said, come back to me in 6 months, and then we'll review that. And hopefully we have more better options for you, but you're also in a better position and you know what you're getting into. So I think if you are going to be letting people who have bad credit history and not discriminate against them to get home ownership, you really need to educate. It's not just about handing them free money.
That makes perfect sense.
I'm glad.
Yeah, like the missing part there is you need to like educate them or whatever so that they'll actually pay it back.
Exactly.
And that's a real opportunity then. Aroob for president of Australia. That sounds like a great policy. Maybe we wouldn't have had, maybe we wouldn't have had 2008 if something like that was in place, where you don't only give out homes and loans, mortgages to people with bad credit, but you also give with that education, financial education. Holy cow! Yeah, that's a fantastic policy. I wonder, has anyone floated around that in Australia or maybe the U.S.? That sounds like a fantastic policy.
I might need to get onto that, right? I
think you'd have your first voter here, although I probably can't vote in Australia or whatever.
Oh, yeah.
I think that's a really it's a smart way to go about it. All right, and then next question, selfish question about America. In my country, America, a couple months ago, Trump floated around the idea of a 50-year mortgage. What do you think of that?
I've heard about that, obviously, in the news, and there's good and bad about it. So in Australia, we've got the average 30-year mortgage, but we've also got some banks and lenders doing 40-year mortgages as well. Again, I'm going to go back to my previous short-term, long-term strategy. I always talk about it. So in the short-term interim, it can actually be good. but not long term. Obviously, you don't want to be paying until the day you're like fully gray and retiring, and that's when you finish paying off your mortgage. You want to live your life as well. Where it's good is for someone who might not be on a very good income at the moment, but they've got a plan and they know that in, say, 4 or 5 years, they'll be able to increase their income dramatically, say by 100,000 or something like that. That's where it's good, because increasing the loan term from 30 years to 50 years increases your borrowing capacity. So that may be that you actually might not be able to get into a 30-year home loan, but you can get into a 50-year-old home loan. But then say in a few years' time, your income has increased and you know you can afford higher repayments and you can pay it off in 30 years, you can actually refinance your home loan. Does that make sense?
So it's good for who?
For people who know they're going to be able to increase their income. So it could be because someone like you who's going to do postgrad and knows that once you finish your degree, then you will be able to, you know, have an offer that's 50,000, 70,000 more.
Gotta be balling.
Yeah. Or, you know, you've started a business and you can see every month the revenue is increasing. So, you know, in a couple of years, you're going to go from 10,000 a month to 50, 100,000 a month. Then it's actually a good strategy for you. If you are a low income earner though, it's not going to be a good strategy for you unless you are very realistic about it that, you know, you're going to have to just pay it for the next 50 years.
Wait, why opposed to like the 30-year loan? Why is that good for people going after the 50-year as opposed to the 30-year?
So there's two things about it. So 50-year term will mean that your repayments will be lower.
Yeah.
Because you're taking that mortgage and dividing it over 50 years instead of 30 years. But having said that, obviously you don't want to be paying your mortgage for the next 50 years. Because even if you're 20 now, you'll be 70 by the time you finish paying off that mortgage.
Oh, screw that, yeah.
Yeah, exactly. So 30 years is always the better option. But as I said, if you can increase your income and in the next few years refinance it, reduce the loan term from 50 years to 30 years, it can be a good strategy just to get into the market. And I always said that, just get into the market, you know, don't worry about your dream home, don't worry about a big house, you know, as long as you can get into the market. But where you're a low income earner and you've come to that point, you're already 40 years old, you know, you're not going to go do another degree, you're on, say, $15 an hour. Do you want to pay for another 50 years? I don't think so. I don't think that's a good strategy.
I see. So it's someone would get a 50-year mortgage for the same reason that people get 30-year mortgage. It only exaggerated, like even lower income earners can get a 50-year mortgage. And just like a 30-year mortgage, you have to have a plan to increase your income for that to work out.
Exactly, yeah. If you have a plan to increase your income, then it can definitely work for you. But if not, it's just a cycle of despair. Like,
Ooh.
I wouldn't want to pay for 50 years for a mortgage. Then I'd rather, you know, live in a caravan or travel the world. I don't know. That's my thoughts, you know.
Probably. So, okay, so the way you put it there, yeah, it's for like really low income earners then. The fact that we're doing that is probably not a good message about our economy right now.
Yeah, I mean, I think they're targeting the wrong audience with this product, basically.
Oh, what do you mean by that?
So I think when Trump introduced this option, it was for low-income earners, you know, because your repayments will be lower, you can actually afford to get into a house. But again, the education piece, you're not educating that they'll be paying for the next 50 years, and there's no way around it. There's no other strategy unless you somehow figure out how to increase your income. You know, if you've got some crypto Bitcoin stash and you're going to sell it and make lots of money, and then you can pay it off.
And well, actually,
did that get a bit serious for you?
where I thought you were going with the Bitcoin thing is it's the same people getting these 50-year mortgages maybe who also are like thinking that Bitcoin's going to save their life or something, and then they're going to default because they don't have that personal finance literacy, because they don't have that education. And perhaps just like the Clinton era, maybe are we making a new are we making maybe the roots of a new financial crisis where a lot of people are
Yeah,
going to default?
exactly. I think you're on the money. That's what's going to happen.
Yikes. Next question. As a mortgage broker, you're also a salesperson. What are your biggest sales tips?
Look, it's a little bit hard for me because I come from a very customer focused, customer centric background. So hard sales is a bit hard for me, but a lot of experienced brokers have told me that you are great with building relationships, just genuine relationships, and work on that. And also just listen out to your customer, because sometimes if we talk too much, we're not listening. If you're not listening, the other person feels, invisible. So they don't want to talk to someone who doesn't want to listen to them. Just hear them out, understand where they're coming from. It might be right, it might be wrong, but then you have to help them navigate in a way that helps them long term. So yeah, that's me. I think I try to build those personal relationships, and financial literacy, financial independence is a huge thing for me. April is financial literacy month, so I'm going to be doing a few reels around that as well. And for me, it's about education and long-term strategy. So it's not just about getting you the house and that's it, end of story. I want to stay with you for your whole life to help you out with your finances. So that's me.
I imagine listening and feeling heard is especially important in finance, like where there's a lot of emotions, probably.
Yeah.
People really in this high stakes thing want to feel like they're taken care of, want to feel like someone's there with them.
Yeah, absolutely.
A little bit like
And
healthcare.
I
Yeah.
worked with,
Sorry, go ahead.
yeah, and I did work with someone who was, just pushy, pushy, pushy. And we ended up losing a lot of customers because this is the biggest financial decision of your life. You don't want to be pushed into something you're not happy with. You want to be heard, and you want someone who works with you and builds that relationship. And I love when my customers, even after they've got the house, or I will call them from time to time, how's it going? Is there anything I can help you with? And that's what I want to build for my customers. I want them to build wealth. I want them to build a house that they love. And you want to show that in your sales tactic.
Yeah, my doctor, I was needing to take this like drug for something, but there were trade-offs, right? So it's trade-offs. Um,
Yeah.
and I was like really on the fence about it. But he was like, "Hey, if you want to do it, you want to do it. I'm not going to force you or whatever." Um, and that really just made me feel very good. If he was really pushy about it, I was like, "Who's paying this guy to give me this drug or something?" I'm freaking out. It's kind of like healthcare in that way, in a little bit. I was thinking, what separates the really high performing, high converting mortgage brokers from the low performers?
I think I'm actually learning it at the moment, being a new business owner. I've worked with others as well. Build a culture, and, once you're growing and scaling that business, have people, who trust you and you trust them back. And that way you can build on the volume and be a really successful mortgage broker, because you are delegating things, but it's to people who you trust and they trust you back. And there's a culture where it feels like a family. You want to work with these people every day. They want to work with you every day. And sales wise, with your customers, always be friendly, but at the same time, tell them the facts. Don't hide the facts, and just be transparent with them. Keep them in the loop, what's going on. And with AI especially, it's so easy to, send them an automatic email or SMS to tell them what's going on at the moment.
Telling the facts and being transparent. Yeah. That's something I definitely see with like the best salespeople I know. Because I'm in Silicon Valley. That's where I go to school.
Yeah. Oh,
And
wow.
the tech sales guys, that's like their biggest thing. It's not even like they're not even trying to sell you something. They're just trying to like educate you about it. You know what I mean? That's what it feels like. They
Yeah.
don't even feel like salespeople. They feel like teachers. They feel like tour guides. Like they're just making sure I know everything about it. And then the more they do that, I get more and more comfortable like with the decision to buy it, which is why I'm talking to them in the first place.
Yeah, exactly.
Or like what options I have.
Yeah. I mean, again, it might not be something you want to hear at the time, but if I explain it to you, educate you, then it makes sense to you, right? You might be like, okay, that makes sense. Maybe now's not the right time, but in 3 months or 6 months.
Yeah. All right. Well, with that, let's have one hand on the microscope, one hand on the telescope. Let's look for certified. Let's look for certified finance brokers
Licensed finance
license.
brokers.
Let's keep believing in the American dream, but having education on financial literacy, not just giving out free money.
Absolutely.
Let's
Yeah.
reduce our income. Let's look for those
On paper only,
on
but in
paper
real life,
only.
increase it.
You were confused for a second. Let's look for those government schemes, those family schemes, and let's get our property portfolios going.
Absolutely.
This was a great episode. Thank you so much, Aroob. Is there anything you want to say before we wrap up?
No, you've just been great, amazing. I've done other podcasts before, but this has been the most sort of relaxed and friendly one, so that's been good. And yeah, I just tell everyone, don't be hopeless. Always, talk to someone, and you never know, you might find out a way that you didn't think about before. And not everyone has that financial literacy, and that's fine. You can only be really good at one thing. So go to the experts, and they'll help you, they'll guide you.
Fundingnest.com.au. That's fundingnest.com.au. Loans, personal finance advice. Aroob will get you straight. Thank you for watching. This is the Marty Hendricks Podcast. Peace.